Hello, everyone, and welcome to another exciting episode of the Pineapple Podcast. Today, we have Michael Ponte. Michael has been investing in the real estate space for over 20 years. Now, he started off just like you and me, trying to figure it out. And today, he is well established in the multifamily space. Michael also gives a lot of his time back in his coaching programs and training and development, helping people along the way to enjoy the real estate space. Michael, welcome to the Pineapple Podcast.
Well, thank you, Mitch. Great introduction, and I'm so happy to be here. I've seen the podcast, love the show. So honored to be able to partake and share in any way I possibly can with your community. So
Thank you very much, Michael. So, I really want to get into where is Michael today in the real estate space? Like what is the specialty that you've gravitated to and you're enjoying now?
oh gosh, yeah. So I guess for myself, I started off in single family, just probably like a lot of people when they first got started, just kind of trying to figure it out, where to begin with. And as kind of my journey went, I started buying just townhouses to begin with, and single family homes, and moved into fourplexes, and then suited houses. And then I got kind of to the multifamily space, and that's kind of where I'm staying and I'm stuck in, right? And I shouldn't say stuck because I absolutely love multifamily. It's a great segment. And it's not to say that I'm shying away from single family. If the opportunities make sense, happy to participate, but multifamily is kind of where I play. Just like all the aspects that come along with this, I'm not so tied to what the market appreciation is. There's opportunities to kind of create forced appreciation. Yeah, so I've been doing that for quite some time now. And like I said, there's pros and cons that go along with every investment strategy, but as you continue to learn and improve, it just gets a little bit easier and better. So multifamily in Canada right now is kind of the main focus for myself and our companies.
So I love that. I mean, multifamily, absolutely. It's been the sexy word for the last few years, as you could appreciate. Lots of
Sexy,
people
sexy. Yeah.
wanting to learn about multifamily. But for our viewers as well, Michael, you said some really important things, and I just want to step back a little bit on that because people are looking to transition from their jobs, their careers,
Yeah.
a whole environment that kind of like based on the traditional way we know society.
Sure.
Great education, great job, retire.
Yeah.
And today
Yeah.
we're saying, great education, great job, transition over into entrepreneurship in real estate and live the life that you dream of.
Mhm.
But that transition period is tough. I always tell people, look, follow my bridge plan, in one of the YouTube channels, course
Yeah.
that I have here, follow a bridge plan. So what was it like for you transitioning into deciding that you're going to start with the with the residential properties? Again, great space to be because it's visible, it's easy to get into from a bank perspective on the first couple properties, right?
Sure.
So
Yeah.
how did you make that mental shift to say, yep, we're doing this?
Yeah, that it was hard. And to be honest, it was really, I'm being honest with your community because I share this with my students as well. It's hell. Okay. It really is hell. Okay. And so, Mitch and I were having a little discussion beforehand, and he was in the food and beverage industry, food and beverage industry, or in the retail side in
Beverage
the
alcohol, yep.
beverage alcohol. And I didn't share this with him, but I was actually in the food service industry in that side back in the days. Okay. So I was, and I shared this many times in many different podcasts as well, but I was the regional director of sales for Western Canada, and I traveled a ton, worked my, what off. It was really tough.
Yes.
And so I got started, probably like a lot of listeners that are maybe listening to this podcast just beginning, is, hey, you know what? I want to invest in real estate because I like maybe the benefits that come along with it. I'm not necessarily happy with the returns I'm getting on my stocks or mutual funds. And that was me. I saw real estate as an opportunity because I was happy with how my home was appreciating. How can I do more of that? And so that was kind of where my journey kind of began. And my first property, I was losing like $40 a month cash flow, and it was like $40. Whippy doo. I'm like, the
That's
tenant's
right.
still paying. The tenant's still paying the mortgage. All that. It's all good, right? Not a big deal.
Absolutely.
Yeah, but it was the following year where that turned into like $250 a month cash flow when I was able to raise all the rents. That the
Yeah.
light bulb kind of like blink, 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 like okay, went on. And so when that went on, I'm like, wait a minute, there's actually money coming into my pocket. What if I did more of this kind of stuff?
Yeah.
And I wasn't overly happy with the job that I was in. And I'm like, maybe I just need to do more of that kind of stuff. And then I can kind of transition. And that's, again, the light bulb came on there. And exactly kind of what you're saying, Mitch, you start to buy your fourth or fifth property and the banks kind of say, Mr. Ponte, you're done. I know you
That's
got
right.
more money, but we're cutting you off. And I'm sure you've been there. And I'm sure a lot of people that are listening have
100%.
been there and just like, okay,
Yep.
and so then all of a sudden, you're telling your friends and colleagues kind of what you're doing. You're at an event or something. Yeah, I just bought another investment property. You're like, wait a minute, you own four properties? And in their minds, like I talk about that from the general public, not the investor community. It's just like the general public. Four property. Oh my gosh, that's insanity, right? They think that's and it is. It still is a lot. We got to pat ourselves in the back for even two properties or one extra property, right?
Absolutely.
And yeah, and then so then you get individuals that are like, hey, I want to participate with you. I want to do something with you. And then again, Mitch and I are kind of old school in this way, and there was not a lot of information back in the day. And so
That's
I started to raise money and to do more acquisitions, and that was kind of where it was at. And to kind of go right to the question, and I know it's going in a long roundabout way.
right.
It came to a point when you're working a full-time job during the day, and it became a full-time job at night. And for me, coming home at 7 o'clock, eating dinner with the family, and tuck the kids into bed, and then pretty much get back into now the new job, which is the real estate investing job, and start to work until kind of 1 o'clock in the morning and trying to find new deals and working with money and lots of emails and kind of scaling that part of the business. And I shared that with you guys. It was hell, because that's kind of what it needed to do. You have to work your absolute tail off to get you to kind of that point where you hit kind of that point where you can say,
Yep.
comfortably say, I can finally leave, right? And it's a lot of work, and it's a lot more properties than a lot of people assume they are. It's just like, 3 or 4 properties aren't really going to cut it. And even the way you structure your deals is not going to cut it. I tell my students this all the time. It's like, you got to look at ways to be creative and really treat this as a business to make it work to that level. And so I left full time back in 2000 and late 2007. So you can imagine what happened the following year.
Absolutely.
Okay. So
Yes.
wasn't the best time to kind of leave your job at that point in time. But again, head down, push forward, and very thankful, because kind of what a lot of people are dealing with today is challenging times. We left our job and during challenging times. And but it provided us with a lot of opportunities to buy as well. So yeah, it's hard, guys, and I'm being very honest. But if you're passionate and ambitious enough, you work through that process, and it takes a long time, and it takes some properties to kind of facilitate that. And it's not easy, but you have to work really, really hard. If you want something bad enough, you got to work. You have to work hard. That's just
Yes,
the truth.
absolutely. And I want to just, point out a few things, Michael. Thank you for being that candid and open, because
Yeah.
a lot of people, sometimes they sugarcoat. Yeah, real estate has done incredible things for me. But you know what? Nobody ever said real estate is easy. It's not
Oh,
easy,
no.
but it's a passion. And I just wanted to point out a few things that you mentioned here. First of all, you didn't just quit your job and say, let's do real estate. One important thing, buy the 4 houses the banks will give you, because that is your best financing option.
Absolutely.
And the T4 slip is very important when you visit the bank.
So true. Yes.
Right? So bridge out. And then you said basically real estate was getting in the way of your job. I love that. You were working at the night, working in the day. Now it was consuming your time. You're realizing, wait a minute, this thing is generating opportunity and money. So now you got to make, that's a big decision, leaving a job
Not
where,
easy.
that the check is there every month and everything feels great, to transition out. So that's a big stepping stone, but it's right because you feel it's right. And then
Yeah.
I love the fact that you came in here, and you're not sort of expecting miracles and magic. You're realizing whatever I have to do, I need to accelerate.
Yes.
1 or 2 properties is great, but not enough. Now, 1 property can change your life. If you're not aggressive in this business, you get a couple properties, man, you're set for your retirement for sure, guaranteed.
Totally.
And if you have the passion and you want to learn about real estate strategies and you want to meet people and you want to help this community, then you do the next step, which is what you're doing, right? Which is getting into the space. So now tell us a little bit, Michael, about the journey in terms of the multifamily, because you've played around figuring it out, and then you fell into the multifamily space,
Mm.
and now you say you enjoy that tremendously. And I know a lot of people are very much interested in this space, including myself. I've been doing a lot of it as
Yeah.
well.
Mhm.
So tell us your experience with deciding on multifamily, and then where do you see it going from there?
Yeah, it's I guess for me, I got into the single family space, and this is my strategy, guys. So I'll just share with the way I like to do things. Um, I I am very risk averse. I don't like a lot of risk, and it may sound kind of strange as a real estate investor, but it's the truth.
Right.
And I always like to dip my toe in the water first before I kind of go all in, right? And so that goes in different investment strategies, that goes in different markets, it goes in everything. Is I want to understand things first. In some cases, it's making a little bit of a small mistake versus such a big mistake. And let me use an example. I'm not going to buy 100-unit apartment building in a market that I've never invested in before, um, because I need to learn that market. I need to learn if that's going to work and facilitate that. And even with the new strategy, it was the same thing. So here I am kind of dabbling in like fourplexes. And again, that's not multifamily, just to be very clear. Technically, it kind of is, but it's not really in the space. And I know, Mitch, I know you know what I'm talking
Yes,
about, but you don't
absolutely.
need commercial financing. You don't have to go through all the loops and holes and stuff like that. You have to go through in a more multifamily space. Is it multi? Sure, it is in theory. But the valuation, and this is the big difference. And once you start to look at multifamily, you are buying a business. You're not buying a house. Okay. You're buying a business now. And the way it's being evaluated is in net operating income and also cap rates. I'm not going to go into too much detail with all of that stuff today, but that's really what you need to understand for your listeners. If you're in the single family space, just understand it's just a completely different strategy that you need to learn. No different than if you're learning, like we are just talking, Mitch, land development. The stuff you learn in
Absolutely.
single family buy and hold is probably not going to help you too much for land development. Yeah, maybe the premise, there's some stuff that's associated with that, but there's just a different strategy. And the same thing with multifamily. The customer side is still tenants, but it's just the way you have to determine valuation was the thing. And so for me, Mitch, when I first got started, it was like, you're doing single family, and it's just like it became kind of boring. And now that I
Right.
realize knowing what I know now, boring is actually really good, right? And I just wanted a little bit of excitement in my life, right? And so that's kind of what I
Yes.
wanted. And so,
Mhm.
kind of learned a little bit about multifamily at the very beginning, and I just bought a small little 9-unit apartment building just to test the waters out. And yeah, I kind of got into it and bought it, and it seemed to do reasonably okay. But again, I wasn't fully knowledgeable about the multifamily space at the capabilities of it until probably my second and third property, right? And what I
Right.
was able to accomplish. So my first property really wasn't that great. It was kind of like just treading water, to be honest with you. And the location was not really that good either as well. And then as I started to kind of determine, I'm like, okay, I want better tenant profile, better suite mixes, I want better locations. It's all those types of things. I started to kind of grew myself in there. But then really the opportunity presented itself where I was able to kind of increase rents. The simplest thing of just increasing rents and increasing the value of the building in a depreciating market. It's just like, wow, this is incredible of what I can do is I can increase value even the market's not doing well. So like in times that we're seeing right now, and this is why there's such appeal in multifamily, is affordability is becoming a huge issue. And I live in Vancouver, and Mitch, I'm sure back east as well, you're seeing it.
Yeah.
It's a challenge. And so people
Yes.
are maybe not buying homes as much as they used to. So they're staying as renters. And now rents are all going up. Guess what that's doing to our multifamily properties? It's all increasing valuations. And so in multifamily, this is a great time to get in. Like it really is. The biggest issue is trying to find opportunities. And I know for all of us multifamily investors right now, everybody's trying to find something that makes sense. And it's
Yes.
becoming a lot more challenging. But this is a real great time to get into the multifamily space for those that are trying to get their head wrapped around it. It's very difficult to find deals, but you know what? It's all about staying persistent, expanding your team, trying to make sure you're making those connections and trying to find those off-market deals. And you know what? There's opportunities that are coming across my desk every single day. And so it's about
Yeah.
finding the right
I,
transaction.
I, I want to hold on there. I mean, this is invaluable information, but I want people to understand what it is you're saying.
Yeah.
Rents are going up, making multifamily buildings more valuable. That is the key. In multifamily, it's not driven by the emotional buyer. It's driven by the savvy investor, and the banks look to value by rents. So it's all about income valuation.
Yes.
But you said an important thing. Now is the time. Even though the interest rates are much higher than what it was, people are shying away without realizing, wait a minute, you better get into it now, because in a year from now, the one thing is mortgage rates can come down and potentially will. Rents tend to remain up.
Totally. You nailed it. You nailed it. And that's exactly it. It's just like when you're buying these buildings and again, I'm a cash flow investor, just to be very clear. And sometimes you have to think this multifamily space, you need to think strategic, which is a little bit differently, is what am I going to do with this property before I buy it? What's the plan? Okay, what's the clear plan? Does that make sense? I know, Mitch, you get it. It's just, what's the plan before I buy this building? What am I going to do to increase the value? And it's just like, again, if you're buying a coffee shop, I use this as an example all the time. Multifamily has more correlation to a coffee shop than it does a single family home. It may sound very strange, but it's because of the valuation, right? It's just like, how do I increase sales? How do I increase sales at this coffee shop? Well, I'm now going to introduce muffins, and I'm going to introduce a special sandwich that with gold flakes on it that's going to cost $100, and I'm going to sell lots of that. Okay, whatever. But what you're doing is you're increasing the sales, which increases the value of the business, and that's the same premise. So if you see a property or multifamily property that maybe somebody's owned for like 2 generations, and I've bought a few of these already, and they've kept the rents low because they're making tons of money. They don't really need to worry about this, but the rents are so low that it's an opportunity for you as a buyer to increase that value of that building. Okay.
That's right.
And that's where the huge opportunities become available. You know, but again, you need to get your head wrapped around it. And, you know, sometimes, yeah, you want a nice, good building in a good location, but it really comes to the premise of this business. And I think the more individuals get their head wrapped around this, they'll better understand it. And, you know, I've seen people become very emotional buyers in this space, Mitch, and I'm sure you have too, is they, you know, I use the kind of this analogy is just like when you're investing in single family properties, you're wearing your single family hat, and everything that you've learned about single family investing, that's the hat you're wearing.
That's right.
When you are going into the multifamily space, you need to take this single family hat and everything that you've kind of learned, put it off to the side. Okay, put it away.
That's right.
Put your multifamily hat on and everything that's part of that, and that's the hat you need to wear. If you don't have a multifamily hat, that's your starting point, is you need to get one. Okay. And that's part of the learning side of things. And I'm not here to sell courses, or I'm not here to sell anything. I'm just saying, just get some knowledge. Like, I don't care if it's YouTube videos or whatever, but make sure you understand what you're doing before you kind of jump in. So.
No, I love that, because that is critical. And I always tell people as well, you know, when you're changing the game and the strategy, you got to really understand multifamily. Like, don't come in here thinking, oh, it's cool and I'll just do this thing.
Yeah.
Your risk factor is tremendous. Your cost of just getting into that property or deciding if to close can run you easily $10,000 with all the inspection fees and things like that. So it's something that you need to learn.
Yes.
But I believe if you have the right environment of people around you to help you, guide you, and train you, the other thing you can do is invest with somebody who is doing multifamily, because multifamily, you cannot do it alone. Yeah. You're always going to be working in groups between working partners and investors, because the size and scale of these properties are so huge that it gives opportunities for everybody. So you can invest your dollars, learn from somebody, and then go do it on your own, right?
100%. Great advice. Great advice. Absolutely. Absolutely.
100%. So I love what you're sharing here, because I think that the multifamily space is definitely a place that's going to be very, very important for the Canadian market. You know, when you look at the US market, I mean, the size of some of these complexes just on apartment buildings is tremendous. And I don't know how many people are following this, but as you know, immigration policy for Canada for the next 10 years is quite aggressive. They are planning to really exponentially grow the population.
Yeah.
With that is going to come the opportunities for people to develop larger size apartment buildings, larger size commercial complexes. And so if you are learning this space now, it's an exciting time to be, because you're still at a level where Canada is still growing, still evolving, government policies pushing it down the way. So now is the opportunity, right? I love the fact that you're saying now is our time. Don't get caught up with the hype and the media thing about interest rate is this and interest rate is that. It's like, guys, just so you know, when you're on the private lending side, if you're lending your money, you're making way more than that, right? And so the
100%.
opportunities are there. You just got to get into the communities, find people who can teach you about it, and then go and do it, right?
Go and do it. Exactly. Like, I think that's the key. Is like, you. It's kind of like that old saying with Mr. Warren Buffett: be greedy when others are fearful, and fearful when others are greedy. And again, I've been around the block for a long time, and I've seen this firsthand a couple times, right? As people are panicking and you get into acquisition mode, and it paid huge dividends for myself and the company back in 2009, 2010. And that's when we kind of started our journey in multifamily, to be honest with you. And we just loaded up, like just absolutely loaded up during that time. Once I got my head wrapped around that process,
Right.
And like I said, it paid huge dividends for me. But for me, it was also about understanding what the plan was, what the objective was, how we're going to increase valuation, and what's happening with trends. You just mentioned a couple of real key ones, is specifically is immigration, right?
Yes.
People may not buy a house right away. They're going to be renters, and the lowest common denominator for cost and affordability is apartment buildings. Okay, you can buy a bachelor, 1 bedroom, 2 bedroom, 3 bedroom, all in the same building. Okay, right. I have tenants moving from 1 bedrooms to 2 bedrooms when, guess what? We have an addition coming. We've got a new baby. Can we have a 2 bedroom? Just move down the hall, off you go. That's wonderful. Isn't that just great, right? You don't have to go anywhere, right?
So. Absolutely. Love that. You're growing within the building. Like, how cool is that?
Cool stuff. Yeah, exactly.
Yeah, absolutely. And then again, set what you want to build, in the sense that, create great quality homes. You're going to have tenants that are going to be happy. They're going to be paying their rents. They're going to be always willing to go the extra and keep the property looking great, because it's their home at the end of the day. And when you set the bar a little bit higher than everybody else, it pays dividends, and the social feeling from that is just incredible. Absolutely incredible.
Yeah.
No,
so I think even part of it too is, and it's another aspect that you take into account is, when you're in a building as well, and ask yourself, what type of landlord do you want to be? Okay. And, there's a lot of reputation, and I hate this so much, is slumlord. I hate that terminology, but in the media, they love throwing that stuff around, right? Yeah. And I like the terminology, and I don't even like the terminology landlord. I hate that name. Okay. But we are home providers. That's who we are. That's what we do. We provide homes. Now ask yourself, what is your reputation? How do you want to be known? If I'm sharing with your community that, provide good quality homes to your tenants, because then you'll have long-term tenants. You'll have people recommending you as a good home provider. And you know what? It starts to hopefully change that negative reputation that's out there, right? And also when you're looking at multifamily, it's another one that you can take into account, is because you have so many people under the same roof, is what's the culture that you're trying to also create within the community itself. Okay.
Right.
Have a little fun with it. There's lots of things that you can do with your resident manager. Maybe it's a little barbecue every summer, or whatever the case. Lots of fun things. Maybe it's a Christmas decoration or Christmas door decoration competition where you give $50 gift card for whoever decorated their entrance door the best. Like we do little things like that. Just makes all the difference in the world to have a little bit of fun and create that kind of community thing, right? So
yes. No, that's huge, because you're right. At the end of the day, these buildings are communities, right?
Exactly. Yeah.
And now as well, you got to remember that the society has evolved to a point now where living as a renter is perfectly acceptable. And so people want to have the best quality home and the best quality life they can have, because it's just the way society is going to become over the next few years.
For sure.
Then densification is coming.
Yep.
People are trying to get more units, or governments are pushing for more units within the same space.
Mm-hmm.
So it means that people as a whole, their dynamics are changing. They don't want sprawl anymore, right?
Yeah.
The whole concept now of working from home, as you can see, most developers and designers, I should say, they're actually fitting into most of the condominium, even though the condo spaces are fairly tight. They're
Yes.
creating dedicated workstation, right, for people to be able to work at home. This
Yep.
is
Yeah.
going to become the new norm. So the fact that you're saying create a culture, yeah, because most people are going to spend the entire day and week at home. So no hustle
100%.
and bustling, So
Yep.
I love the fact that where you're taking your thoughts and the whole community piece. I absolutely love that. I think that is a game changer, because
Yeah.
then when people come in, they realize you're creating value. You're not just providing home, as you say, right? You're giving people
Yeah.
quality.
Exactly. And small things. You don't even need to do a lot to do that, because think about just typical landlords out there. Just simple things that you can do. Even just like a Christmas card at the end, maybe a little bit of a gift. You got to remember, these people are paying you thousands, if not tens of thousands of dollars a year. Okay. But
Absolutely.
really, what's the cost of a $25 Starbucks card at the end of the year for Christmas? What about a birthday card? You know when their birthdays are going to be? Send it out. It's these small little gestures that are going to differentiate good landlords to bad landlords, okay? And as a community, I hope we all can step up, to be really honest with you, because it shows the integrity of what we should all be striving for, is trying to create that positive community and hopefully change the face of landlording to home providers, truly. So
Yes, absolutely. Great philosophy. Absolutely. So, Michael, tell us a little bit about what is in the future for you.
oh boy. Well, for myself, because I've been in the industry for a long time, and we've had our properties for a long time, it's a kind of a mixed bag. We're actually cashing in some of our checks, to be honest with you, or cashing in the chips, selling some of our properties that we've had in the past, and repurposing a lot of that cash right back into the market for future opportunities as well, right? So that doesn't change. So we're still in acquisition mode. I love this business, and I joke around. It's kind of like a drug. It's like once you kind of get started, it's like you just keep going. And it's not
Yeah.
even so much about the money aspect. And it really is still about the money aspect, but it's the game. And that's the stuff that I truly enjoy. Is I love finding deals. I love securing properties, doing what we need to do to increase valuation. And it's a fun business. I love that part of the business, and I don't see that ever changing. So we're definitely very involved in the Canadian marketplace. We are kind of taking a look down in the States. I haven't spent much time there yet, but I still think there's so much opportunity here in Canada, to be honest with you,
Right.
especially during this time. There's going to be some markets that are going to perform better than others, and just pay close attention to this, because we're changing a little bit of the dynamics of markets like Vancouver and markets like Toronto maybe not taking the lead like they have been in the past. We're going to see different markets like Calgary going to take the lead this next year, and so for those that are paying attention, pay attention. Like you don't have to always invest in your backyard, and that's a tough thing for people to understand too. Is just go where the numbers tend to work and build your team around that. And so that's exactly what we've done over the years. And we're going to continue to do that, right? And so we're also looking a little bit internationally. I'm Portuguese, and I've shared this with a lot of people on different podcasts as well. And so traveling out there last year, again, you look at short-term rentals and how I can integrate that with maybe multifamily out in that space out there. So again, I like to believe, and I share this with my students, is don't be so kind of narrow focus is in a market. Like expand your horizons and look at other opportunities, because once you start to expand, you'll be shocked at some of the opportunities that are available in different markets and different segments and stuff. So that's kind of what we continue to focus on from an investing perspective. And then at the same time, the one thing I'm very passionate, and I know Mitch, you are as well, is sharing and teaching people. And I love it, because Mitch and I were kind of talking beforehand. It's really about sharing our experiences to help others become successful in this game as well. And so for me, it's kind of like seeing people when you get a chance to teach people and then they go out and make it happen, and then they've secured their first multifamily or they've raised their first $500,000. The pride that as an individual of being able to help them, support them in that journey is fantastic. And I always say this to my students is I don't want any credit on any of that. This is your success because you've gone out and hustled and made that actually happen. But what I want is to give you a high five. And so for me,
Nice.
I love giving high fives. I love getting texts saying, I just bought my first multi, I bought my first personal resident, or bought my first condo. It doesn't matter the size. It's just that they've actually taken action and watching their journey as well. And it's a passion that I've continued to have. And like I said, I don't ever see that ever changing. So for us, it's just further expansion in that and supporting our students, supporting our community, continue to invest, no different than what I'm sharing with our community as well, side by side. So we're all in this together, pushing ourselves forward so we can all be successful together. And Mitch made a point of this, I think, earlier on in our discussion. There's enough properties out for everybody. There's so much out there. It's in the 20 years that I have been doing this, it's very, very rare that I actually run into another investor that I actually know on the opposite side competing for the same deal. Very, very rare. Very rare.
Absolutely.
So yeah. So that's kind of what we've got planned for this next several years. And like I said, in a lot of ways, I actually kind of don't really see myself retiring because I kind of see this as just, again, it's a game for me. It's fun. I love it. And if you treat it in that type of fashion, and don't get me wrong, there's goods and bads that come along with this, but I think the goods really outweigh the bads. So
100%. Thank you for that. I mean, that is a phenomenal way to look at how you're going to progress. I love the fact that you love being local and then looking to expand out from that. I mean, you're right. You can choose a market because there's just so much opportunities. If you study the market, know the market, then your level of confidence goes through the roof in terms of your ability to make a decision to invest. I think that's huge. Yeah. Michael, I want to thank you for being on the Pineapple Podcast for sure. Is there any parting tips or words you want to leave our members if they're still in that state of trying to transition over into real estate investing?
Yeah, I think for everybody, you know what, overcome the fear. Don't read the headlines, to be really honest with you. You can read the headlines and be fearful, but just understand this is where opportunities really become available. And I think the important part is engage, network, and talk with other individuals. Reach out to me, reach out to Mitch, I would imagine, and talk to people that have been through this before and seen that experience. And I think the important part is by having clarity to what you want in your life, like your actual why. Okay. If this is something you want bad, really, really bad, do not let fear hold you back from accomplishing that. Get out there and make it happen. Yes, maybe you need to do a little bit more learning. Maybe you just need to talk with a few people to overcome that. But do not let fear hold you back. And this thing, now that I'm kind of getting a little bit older in my life, man, it's a short life we have. Things go by really, really quick. Today, tomorrow, next week, a month from now, a year from now, you can wait forever and ever and ever, and things will be passing you by constantly, right? The best time to buy real estate was yesterday. Okay. Well, tomorrow you'll say the same thing. And then next week you'll say the same thing from there. So guys, there's opportunities out there everywhere. Don't ever believe that that's not the case. Just get out there, get yourself involved. And if you want it bad enough, you can make it happen in any market.
Wonderful. Thank you very much, Michael. And for our viewers, we will leave Michael's contact information in the comments below so you can always connect with Michael. And again, folks, remember, thank you for watching the Pineapple Podcast. Remember, it's all about being tough on the outside, sweet on the inside, and wearing your crown of gratitude proudly. Remember, hit the like, subscribe, and notify button as we continue to grow our base. Take care, everybody. Bye.